Well, I think there have been certain sports, particularly in America, that have been very investable for quite a long time. Very different system, of course, in America. You have closed leagues, and you have cost caps, and all these different types of things, mostly not in baseball, but in the other sports you do, which means that the clubs in the US return a reliable profit, which of course makes them investable. Any profitable business is going to be investable. In Europe, and in particularly in European soccer, which is the biggest sport in the world, so to say, has been traditionally an area for passion investing. So it tends to be a wealthy person who was a fan of the club, or a local person, whatever it might be. And that's gradually changing as the size of the revenues involved in football, particularly in English football, but in other parts of football as well, have grown and grown and grown and grown and grown to the point where they're now, comparable with and sometimes surpass those in American sport. And that's starting, that over the last 5 to 10 years has started to attract the attention of what I would call more institutional capital, or in some cases, ultra high net worth people who come from an institutional capital background using their own private money. Probably the latter is the starting point. That's where you start, is when you see people who come from a private equity or a hedge fund or a banking background starting to make private investments into professional football in Europe. And then they're followed in turn by the institutions that they are involved with, or that they have previously worked for, say, okay, if the smart guys are investing in this, perhaps this is something that we should be looking at as well. Well, as I said, I think in the US, fundamentally what you're looking at is a dividend play. These are pretty mature assets. These aren't assets that, I think probably with the possible exception of the NBA, these aren't necessarily assets that are expanding a huge amount. And therefore what you're looking at is highly profitable businesses that turn out effectively a dividend, right? And on top of that, they're fun. It's more fun to own a sports team than it is to be in a more sort of passive type of investment. And you might also have a belief that over time, over decades, that generally speaking, this is going to be an asset class where people are always going to be interested in sport. I think in Europe and in the UK in particular, there's been a much faster ramp up of global TV revenues. Soccer is the global game by miles and miles and miles, the biggest sport in the world. And effectively, the way in which things have worked through is that the English Premier League has become the equivalent of the Major League for soccer, right? So yes, there is something called Major League Soccer in the US, but I don't think anyone even in America would say that that is the Major League. The Major League is the Premier League, as things have happened. And that in turn has created a sort of, I would say, an interest amongst a lot of US investors and US institutions saying, well, if that is going to be the Major League, then that's what we want to be invested in. Now, at the same time, what's previously been a very lax, sort of rather laissez-faire attitude towards cost controls and finances is gradually being brought into line more with US sports. We're not looking probably at hard caps in terms of salaries paid to players, but you're looking more like soft caps in terms of percentages related to revenue. But nonetheless, the net effect of all of that will be that the teams will start to make profits. And once you've got massive franchises playing in the biggest leagues in the world, in the biggest sports in the world, with the biggest growth profile in the world, also making profits, then you have highly investable assets. And I think what we're seeing at the moment is some pretty smart capital saying, that's where it's going to end up, and I want to get on board before the asset value goes too high. If we're talking about European professional sport, and particularly European professional football, which is the most sort of liquid of the sports, I guess, and is the most European-centric of the sports, I think probably the thing to be aware of is that in many cases these clubs currently lose money. So the upfront price you're paying will not necessarily be your all-in cost. You have to bear in mind that at times there are going to be capital calls, and that these aren't going to be capital calls necessarily like in the tech industry for what, of course, sort of growth capital. This is like filling black holes, right? Until the regulations have got the costs under control. So that's the first thing to be aware of. The second big thing to be aware of is that in Europe and European football, we have relegation and promotion. It means that teams can both go down a league if they play badly and come up a league if they play well. And whilst that is extremely value accretive if you're going up a league, it can be very value destructive if you're going down a league. So the same sports club, the same football club in England may be worth, for instance, £50 million in the third division, £120 million in the second division, and £400 million in the top division. These are very large differences to have just purely based on whether 11 young men can kick a football in the net and keep the ball out of the net at the other end. So this lends to, I would say, it can end up being quite a sort of a nerve-wracking type of investment where things are quite dependent on how things go on the pitch. But it's exciting as well. It is exciting, and it brings, huge adrenaline rushes and all this type of stuff. So there's an upside to it, but you need to have the right temperament to be able to cope with the ups and the downs. And you need to have the right management team. You need to have people running the business for you who know what they're doing, and resist the temptation, if at all possible, not to try and run it yourself as an investor. Because professional sport is a trade. It's a trade like running a steel furnace. It's a trade like running a shoe factory. You have to understand all the different elements within the trade. And if you don't understand all those elements, you will be in danger of making a fool out of yourself. And I think part of the problem is that sometimes high net worths or ultra net worths who buy football clubs have themselves been football fans, and they think that because they've watched a lot of football, that can necessarily make them very wise at running a football club, and those instances tend to come a bit unstuck. So have the original insight in terms of your investment profile. Appoint the right management team, a good, strong management team. Try and align them if you can with options to try and make sure that everyone's on the same page. And then have a clear view about what timescale you're operating to. Yeah, I think as sports investment becomes more institutionalized, and as more institutional money comes into it and it professionalizes, the same kind of conversations need to happen in professional sport that already happen in other asset classes. So you need to share best practice, you need to find out what investor appetite looks like, you need to pick other people's brains about what the trends that they're seeing are, etc. And also just to sort of maybe hear about opportunities, opportunities that might be coming up in the near future, and where they might lie, and see if it's something which might perhaps benefit either oneself or one's investors or whatever it might be. So these conferences are always absolutely invaluable to sort of really take a sort of finger in the wind, take the temperature of where investor sentiment is.